is talking about the economy, the economy, the economy. So you're the perfect person to break this down for us. You explain things in a way.
I'm the perfect person in a lot of ways.
In so many ways.
In so many ways.
Like I heard you're like a fashion expert.
Yeah, I'm a fashion expert.
Well, let's talk about what's happening with the economy. The stock market. We hear about that every day on the news. What's going on?
Two things to know: China and oil. So the concern in China is that demand is slowing. And if demand slows, a lot of other things slow because China's not buying them.
Right.
The second thing is oil. Saudi Arabia has a really low cost to produce its oil, and they've said, we're going to protect our market share. So we're going to open those taps up and put in all sorts of oil onto the market, even though the market doesn't need it, which puts pressure on the price of oil.
Yes.
So in Alberta, they're like, hey, wait a second, why is the price of oil falling? Because our costs are higher, and this is a problem. So the China issue and the declining price of oil are what are putting pressure on the Canadian stock market.
Yeah, we're having a really tough time out west because to extract oil from sand is very expensive, right? Yeah. So we can't keep up. Let's talk about our dollar. So
two things driving the dollar. First is oil prices, as we've mentioned, and the second is interest rates. Our economy is not doing great, so the Bank of Canada is keeping interest rates very, very low. Those two things means internationally, they don't want our dollar. They don't really want our dollar. Now, that's not necessarily a horrible thing. In some ways, it's good and it's bad, but parity was a fantasy. Remember when it was a parity was U.S. and Canada similar? It is akin to me having 20 extra pounds of muscle. Right. I could do it if I was shooting the Avengers sequel. Yeah. I could. For like 5 minutes, I could be that way. But then I'm going to shrink back to this. This is just my natural kind of state. Yeah, how many people hate him for that right now? Like, I really wish that was my situation. So when it comes to the dollar, we make big hay of it. And if you want to go to the U.S., it's not a great thing. Yeah. But if you're an exporter and want to sell your products around the world, it's a great thing. If you run a business here in Canada, you want Americans to come here, it's a great thing. Okay, so it's not all bad. It's just the way you look at it. Now, what do we do about it? Do we just freak out at home? Is there something we should be doing with our investments? No,
what do we do?
Nothing.
Nothing.
We breathe. We breathe and do nothing, for the most part. Keep contributing to your retirement savings. And if the news makes you crazy, tune it out. You know, there's certain news stories that I simply, as a parent, I can't watch them anymore because I have a 6-year-old. So I just tune them out. I pretend they're not even happening. So for a lot of this, tune it out. You could say that the market is 20% cheaper than it was just a couple of months ago, so you're getting a bargain. So maybe invest, though? Yeah, keep doing, especially on retirement, right? So retirement savings for many people is 10 years away, 20 years away, 30 years away. Even if you're already retired, you're 65 and you're already retired, you don't need every single dollar today. You need some of those dollars in 20 years from now. So whether they're up or down isn't such a significant deal. The bigger risk to me is you sit on cash or you spend the money on something else and then you don't continue to save for retirement. So it takes some courage to do that, but I recommend people steer the course. Steer the course. Okay, thank you for that. Talking about the economy before the break. And if you are pushing Valentine's Day products, you're probably safe. You're safe. If you're a server and you're on shift on the 14th of February, you're good. You're so good. You are good. Others may not be so good when it comes to this economy and our job. So what does this mean? Well, it really depends on your industry. So if you're in the energy sector, you know, and you've been watching your back for months. The other sectors of the economy, some of them are actually doing really well. So in Ontario, for example, there's a lot of manufacturers who can't even find people to slot into jobs that they have because their businesses are booming. So it's really, really different across the country. What I would say is to keep your antenna up to know what's going on in your company and in your industry, and also think now about what your buffer is. So an emergency fund is a special account of a little bit of money that can take you through to cover your mortgage 3 to 6 months if you do indeed get laid off. The other thing to think about in your job is be really great at it now. So not that you're not always trying to be really great at your job, but as you think about, wow, if there's going to be cuts and there's, 10 people in my division, I want to be the most positive, best performer and all that regardless of what happens. Don't do that just to avoid the axe. No, but it's a smart idea. Don't be realistic about it. I guess now would be the time also, if you've always wanted to do that course or to see about something else, a different skill level, developing that. Maybe go down that road too. I just think you can never be too sure. The glass is half full as some people get laid off and it's horrible for a time, but it also marks a change that works well for them over the course of their life. So if that's your circumstance, I have full empathy for people who are in that circumstance, but for some it can be a new beginning.